What's up, everybody? This is Investing Sensei here to bring you episode 67 of the portfolio update. So there's a couple things I do want to cover in this update. I want to talk to you guys about why I chose dividend growth investing and the pros and cons, and I want to show you guys some type of the results that I've gotten from dividend growth investing. And so we're going to jump into it, but first thing I want to show you guys is the basically weekly update that we do. So I just want to show you guys that we are at $149,063.96 from the previous week. So our portfolio is still continuing going up, and you guys can see, like, over the time that we've been investing, we did see that market crash from March, and then we just have been going up and down, but the trend is going towards up. And awesome, this is really awesome, because if we go over here to the activities, there's a couple things that you guys might notice, and I want to show you guys. So I need to start filtering this by this past week. So you'll see that we did withdraw $20,352, and I'm gonna talk to you guys about that because this is actually part of M1 Borrow, and I'm gonna tell you guys why I did it and what I plan to do with this. But overall, you guys saw that Cisco did pay us a dividend of $16, and then we did do a buy of $24.76. This was mainly from dividends, so we bought some Altria. I've been buying a little bit of Altria, and then we deposited the $100 for the weekly contribution to continue to dollar cost average into the portfolio, and the other $100 is to pay off that borrowed money that we got to buy $4,000 of JP Morgan. So we are trying to pay that down. Remember that the interest we are paying is about 2%, so basically the dividend amount from JP Morgan will pay off that interest. On top of that, we are making some extra income on it, and that doesn't even include the capital appreciation we've already received from JP Morgan, which is pretty sweet. But anyways, on the 21st, I did two buys of $116 with the $100. I bought some Altria and some Lockheed Martin. These are two of the companies right now that in my portfolio are in the red. And then the last one you guys will see is that I deposited $1,200. You guys will see this. This is actually not part of the portfolio. If we actually jump over to M1 Borrow, you'll see that I ended up borrowing $20,352, which is what you guys saw. What this is that we saw a great property that came up for sale that we wanted to purchase, but we needed the down payment. So this is an awesome opportunity where I got to use M1 Borrow to do that down payment and take opportunities, because I know that property will increase in value, and otherwise if we hadn't met the down payment, we would have lost a chance to getting that property. And we actually got the offer accepted. Right now we're going through some type of testing that we are paying, some inspections, but overall we are planning to pay this off. We did have some money saved off, but we didn't want to use all of it, so we did borrow some of the difference, and we are going to plan to pay that off as soon as possible. And as you guys already saw, this $100 that I did contribute, that was for the $4,000 that we bought from JP Morgan. And then this is actually to pay off the $20,352. So that's gonna be our main goal right now, is to try to knock this borrowed money paid off as soon as possible, because that 2% is not too much. But we want to have that opportunity. If we get another market correction, I will be using this M1 Borrow leverage and get some awesome gains, because long term the portfolio will grow in value, and we're gonna knock this out very soon. We hope to have it in a couple months, all of this paid off. But anyways, guys, that is all I have for you on the activities. I do want to actually talk to you guys about something with the script, so I'm gonna jump over to the Google Sheets. And one of the things is that you guys actually probably ran into this issue for the dividend payouts. I believe it's the script itself. For some reason it wasn't working. I think maybe a lot of people were using it, and Seeking Alpha ended up blocking it, thinking it was a bot. But for some reason it did start correcting itself, so I'm gonna try to kick it off, see if it actually works again. So you just go to get latest dividends, and then this will run. But yeah, hopefully it doesn't break. I do have a workaround if it does happen again, and I will release that for you guys. But I mean, it seems to be working now, so thanks for reaching out to me and letting me know. And I have some new updates coming for this type of scripts. If you guys are interested in it, I do have a video tutorial that you guys can follow. It's version 1, 2, and 3, and it's pretty awesome. As you guys saw, that we are having a couple of dividends coming out, so I'm excited for the JP Morgan one, because remember, we borrowed $4,000 and we bought it right before the ex-dividend date, so we are going to get some massive dividends for this one. And then AT&T and Verizon are going to be paying us out here. And then for our the dividends that we can meet still are all of these right here for us, which is really awesome. We can meet the ex-dividend dates, so I'm excited about that. But I think that's all I have for you guys. Actually, one of the other things I do want to show you guys is the dashboard, which you guys saw we did we reinvested some dividends, and we also invested $100 into the portfolio. So let's see how much this actually increased. So I already went ahead and made a copy. I'm gonna jump over to personal capital so that we can grab the holdings and see how our projected annual income increased. So I do have a tutorial for this script as well if you guys are interested, but let me pull up personal capital. Alright guys, so we're here in personal capital, and I have the M1 finance portfolio pulled up. So if you guys are interested in the script itself, I do have a tutorial for that, so check it out. And anyways, you do see a copy holdings. What this does is that it'll copy it into your clipboard, and then we can basically just jump over back to our Google Sheets, and then we just update that for us. So it's just in the settings. I just basically delete that, and you just right click and then paste special, paste values only, and that's basically it. You'll see something on the holdings. This is actually what it reads out, but we want to update it. So you just click portfolio tools, update portfolio holdings, and then it'll clear it out and basically redo it with the new updates. So if we go over here to the dashboard, you'll see it's calculating everything. So I'm excited to see how much our portfolio is getting paid on the hourly work wage. It's always interesting to see that. That one typically takes a little bit to increase, which actually it did increase this time, so I'm really excited. So for the month, guys, you saw that we did increase it about $1.70 or so, 72 cents. So that one's pretty good. And then for the week, we are at $55. The day, we are making almost $8. Hourly, we are still only making 33 cents every hour that goes by. But if we are making an hourly work wage of $1.39, so hopefully we could eventually get this to minimum wage, which would be pretty awesome. But that's what I have for you guys. If you're interested in the script, it's completely free. I have a tutorial for it, so definitely check it out. Be sure to subscribe and hit that bell notification, because I do make new updates for these type of scripts. There is a new thing that I want to show you guys on what I'm going to talk to you guys about, why I love dividend growth investing, and it's basically going to be some new features I'm going to be adding to the script, because it'll calculate some really cool stuff for us. But now that I am done with the update, I want to talk to you guys why I love dividend growth investing. And the first thing that is not really related to dividend growth investing, you could have just growth investing or value investing. I want to show you guys the compound interest calculator, in case you guys haven't used it before. I'm going to pull it up. You guys just type in compound interest calculator on Google, and for us, we're going to use this one. So all you have to do is you put your initial investment, so you guys can see how much, when you have time in the market, you don't need a lot of money to generate wealth. As long as you have time on your side, you are good to go. But let me show you guys. So right now, the portfolio, which actually I did forget to show you guys this. I'm going to jump over back to the WEBULL sheet, and I'm going to show you guys the money invested. I do have currently we are about almost $86,000 that we've personally added to the portfolio from our own money. You guys already saw that it's not completely like that. It's almost in the six figure now. Well, it is in the six figure, but it's at almost at 150,000. This is how much we have borrowed left, but I just want to show you guys this, because this is what we're going to put as our initial investment. And if we go over here to the compound, I'm going to put 86,000. And then our monthly contribution, that means how much we are going to be putting every single month. Since my goal is to put $100 every single week, that is $400 for us. And the time before I am actually going to use this money, I'm going to say like 35 years before I even need to touch this money. And then So the stock market typically returns about 7 to 10% on average, so per year. So we're gonna stay conservative. We're gonna say 7 years. I mean 7%, not 7 years. But then you just click calculate, and then at this point you'll see how much we would have. So by 35 years, we'll have $1,581,000, and you guys can see here how basically the compounding works for us. Is the one in the red is the compounding, the green bluish one is how much we've contributed. So you can see that it's very linear for the contributions, but the red here for the compounding actually ends up going exponentially, because you guys can see that every single year it just grows and grows. And look, I'm just gonna actually show you guys, if we were to leave this portfolio for 1 extra year, how much of a difference that makes. So let's go ahead and just put 36 years. And so you guys can just see how much. That's awesome. You basically get another 100,000. Let's just be, let's just play around with it. Let's say you left it for another 10 years. How much that makes it. We basically double it by that point. And remember guys, this is staying conservative, 7%. Let's just go ahead and do 10. Let's say we were doing 10% on average per year. We would have $9 million. That would be insane. And so one of the things about this is that, this could be with growth investing or dividend investing or dividend growth investing or the value investing. But in our case, since we are doing dividend growth investing, we are getting paid monthly on dividends, and we don't have to sell out of that equity that we have in those companies, which is really amazing to me. And as well, I'm going to talk to you guys a little bit about the tax benefits that we get. But I do want to actually show you guys what the full value is, because our portfolio right now is at 149,000. So I want to, let's say 35 years again, and we're just say conservative 7%. So this is what I hopefully plan to have by that. So hopefully 2 million is hopefully what we end up getting. We don't know yet, we'll see what happens, but I am loving dividend investing, because even if we get red days, we are getting those dividends coming in still. But just in case you guys are trying out this compound interest calculator, try it out, play around with the numbers. If you have a lot of time, if you're about 18 years old, definitely consider it. Definitely consider opening a Roth IRA, because it's going to be tax free by the time you turn 60. So all those gains you make, you won't have to pay a dime to the government. So this is awesome. But one of the things I want to show you guys is the gains with dividend investing. So let me pull up the portfolio. I'm going to go over here to holdings. So one of the main things about dividend investing for us is that I did see a video where, some people are like, no, dividend growth investing is really slow, and like you don't make a lot of money. And so I think that you do make a lot of money with dividend growth investing. It's just that it does take time, and you can start seeing that snowball grow and grow larger and larger. And it's not just the dividends themselves. You guys can also see that the companies do appreciate in value over time. So like an instance for us is that I bought Apple here for us. Well, I believe 2019 when I started investing, and I put about $5,800, right? And I have been collecting dividends from Apple every single quarter. They have been raising their dividend. And look at how much we are in just capital appreciation. We're up $12,000. So we've basically 2x'd our money. So it's valued at $18,000 on top of the dividends that we have received from Apple. That's insane, guys. That's dividend growth investing for you guys. That's why I love it, because we are getting both things of the, both things that are awesome. We are getting the growth as well as the dividends. And as well, you guys can see like even Nvidia, that we almost turned $6,000 into $23,000, and we are still getting paid from Nvidia with dividends. Same thing as JP Morgan. This stock, we're gonna see massive gains on it. That's why I've been buying heavy, and I have over 100 shares. I know we're up 10%. Hopefully the stock tanks some, because I want to buy some more. But we are gonna see that, and we also are gonna see dividends increases, and also they're going to continue to pay those dividends for us. Another one here, guys, Microsoft, $7,000 that we've gained just in capital appreciation, not including the dividends that we've gotten. So that's really awesome. They've also done dividend raises. So I just want to show you guys that with dividend growth investing, you guys can still get the capital appreciation on top of that, just awesome dividends you guys get. So one of the things that I want to show you guys as well is that you could basically just come here, filter out by dividends, and then see all these dividends just pouring in. $16, $13, $11, $41, $5, $1, $20, $7, $6. All of this stuff adds up, and they continually increase them because you want to invest in companies that do have an awesome CAGR. So I want to actually show you the spreadsheet here, which I want to show you the dividend payouts. As we kicked off the script, you'll see that we do get raises. So like American Towers gave us a 6% increase for doing absolutely nothing besides holding the company. So that's really awesome about dividends. Avi gave us a 10% increase. Pfizer gave us an increase of 2.6%. which is amazing because especially like in this pandemic, we're getting all these raises and we're doing absolutely nothing. And that doesn't even include the fact that you guys get amazing tax rates. So when you have a dividend company, after you've held it for 3 months or 90 days, it basically becomes a qualified dividend. So basically you are only going to pay 15 to 20% depending on your tax bracket on that income. So that is amazing because you don't have to sell out, and every time those dividends pour in, you're gonna only have to pay 15 to 20% versus, let's say you're in the 30% tax bracket, which is really awesome. I think that's a super awesome thing. That's why the wealthy stay wealthy, because of those type of rates. And Warren Buffett just pulls in so many dividends, and they're all considered qualified dividends from Coca-Cola, and man, he's making a killing with those dividends. But that's one of the other reasons is the tax benefits. They're really awesome with dividends. You don't have to sell out of the company. The last thing I want to show you guys is the Seeking Alpha. Well, I have a couple of tickers that I want to talk to you guys about. If you guys just type in seekingalpha.com, we do have Microsoft. So that is one of the companies that I showed you guys earlier. Right now, the dividend yield for it is 9%, almost less than 1%. But if you look at the CAGR, this is how much they increase their dividend by, 10%. So this is a double digit one. They've been increasing about 17 years. And that is one company that I hold. The next one that I want to show you guys is Apple. So they have almost a double digit dividend growth rate. And then they've been paying out a dividend for 9 years. Over here we have Visa. They have almost a 20% 5-year CAGR, and they've been increasing it by 12 years, the dividend. So that's another one. And then we have Costco, which is almost a 13%, and then 16 years that they've been paying it. I know that you guys are probably looking at the dividend yield, and you guys are like, man, this thing sucks, right? But remember, look at these CAGR and the number of years that they've grown it, and also look at the payout ratio. This company is going to continue to increase it. I'm going to show you guys actually in a little bit how my true cost basis, or my true dividend yield for these type of companies are. But this is how we're going to increase it. Remember, we have time on our side, and these dividend yields are actually not going to be truly 77, well, less than 1%. They're going to be higher than that because we get into the stock, and that stock appreciates as well as they continually increase that dividend yield. So they increase ours. And the last one I want to show you guys, just for an example, is Starbucks. You guys can see that it's almost a 20% 5-year CAGR and then 10 years of growth. So that's really awesome. You guys can see that it's at 1.73% dividend yield right now. The way you can calculate that is just divide the annual payout by the current stock price. But in our case, I want to show you guys our true cost basis, which is something that I do plan to automate. So I will be adding that to the scripts. So definitely look forward to that. It'll be really awesome. I've been planning to do this, but I think it's gonna be awesome. But let me jump over to the M1. I'm gonna show you guys the actual true cost basis for Starbucks, which I clicked on the wrong sector. We're in consumer and then Starbucks. And if we look, our current share price, our current average share price is $79.06. So if we go back over here to Seeking Alpha and we look at this, they do an annual payout of $1.80. The way you can calculate your true cost basis is if I pull up this calculator and I basically divide $1.80 by our true cost basis, so $79.06, and then you just multiply by 100, and so our true dividend yield for our shares is 2.27%, which is amazing, guys. This is really awesome. It's not really a 1.73% because we've held this company for a year or two. Imagine holding this for 15 to 20 years. You're gonna have definitely probably over 10% on this company, and this is a really awesome, solid company. One thing that I want to show you is that they increase their dividend every single year, and you can look at the dividend history just in case you guys didn't know about this, but you'll see that they do increase it, and they actually recently increased it. They increased it this past quarter, so they increased it for the fourth quarter, and that was really awesome. So we'll probably get another raise back in maybe September or so when they pay it out in November of 2021. So we'll probably have another raise, so that's really awesome, and it's always exciting to look forward to, especially because you do absolutely nothing to get those raises. And yeah, guys, this is why I love dividend growth investing. Let me know in your comments what you guys love to invest in, and I'll be glad to hear what you guys think. And thanks so much for watching. Be sure to subscribe, hit that bell notification if you haven't done so. I'll catch you guys in the next video. Take care, stay safe out there. Bye, guys.